Good morning. Today we'll go into the details of section number 148, which is the mother section of cost audit. Entire syllabus is based on that particular section only, 148. I'll have detailed discussion of 148. Student it వచ్చి ఇక్కడికి వచ్చి so that I can cover this side also. Okay. So 148 section, Companies Act 2013. So it is the mother standard, father, son, daughter, all kinds of relationship you need to maintain with this section because this is the base. Okay. So let's start 148. Detailed discussion will be there. I'll just open Ministry of Corporate Affairs website so that I can directly download section number 148 from the law itself. Okay, so we'll read that particular section and then we'll try to frame some on the spot notes, and that notes is sufficient for the final examination. You don't need to refer any other book. Okay, I'll complete in detail all the provisions of section number 148. Okay, so let's open section number 148. If you have phone, you can also open MCA 21 website name, MCA 21, Ministry of Corporate Affairs, MCA services. So open that. Also open acts and rules. In that acts and rules, go to Companies Act. Go to Companies Act. In that Companies Act, so section number 148, section number 148, it comes under chapter number 10. Chapter number 10. You want me to repeat? Ministry of Corporate Affairs website. You will have this home screen. After that, you have acts and rules. Acts and rules. So click on acts and rules, scroll down. Then you have Companies Act 2013. So this is how you need to open your website. So Companies Act, if you want to learn, so all the direct law will be there itself. Yes. So scroll down and you will have chapter number 10, audit and auditors. Chapter number 10, audit and auditors. Still you are not able to find? Audit and auditors chapter number 10. In that, come to section number 148. Click on 148, that's it. Click on 148. I just want you to open in your mobile phone. Open. Section number 148, able to find? Yes, let's read section number 148. Central government to specify audit of items of cost in respect of certain companies. So who is having that power to specify the audit, to specify or to order the company to get their cost accounts audited? So this is the question. Who is having that power? Central government. In the name itself it is there, central government to specify. Central దొరకలేదా?
అందులో కింద అపాయింట్మెంట్స్ అవన్నీ ఉన్నాయి.
Easy. Scroll down chesi you'll get. Okay, so I'm now trying to read section number 148, subsection number 1. Notwithstanding anything contained in this chapter, the central government may by order in respect of such class of companies engaged in production of such goods or providing such services as may be prescribed. So there are only two things which are covered, that is production of such goods and provision of services. There is no point called as trading. So trading activity is not there. Either you may be manufacturing or you may be service provider. You may be a service provider, and for those kind of persons, central government may order. Okay, central government may order. What can be ordered? Central government may direct that particulars relating to utilization of materials or labor or to other items of cost shall be included in the books of accounts kept by that class of companies. So what does it mean? What does it mean? What they are trying to say? See, there is one section called as section number 128 under Companies Act 2013. This talks about books of accounts. This talks about books of accounts, which is financial books of accounts. Financial books of accounts. Whereas when we refer section number 148, central government may order certain companies which are engaged in production of goods or provision of services. For those type of organizations which are engaged into these activities, they may need to maintain the books related to material, labor and other cost elements. The books related to material, labor and other cost elements must also be maintained by those class of companies which are prescribed. What are the companies which are prescribed? We will see later. For the time being, as per section number 148 subsection number 1, the central government may order certain class of companies as may be prescribed which are engaged in production of goods or services, and they are directed to maintain the details related to material, labor and other costs. So these are the things we need to maintain. This is section number 148 subsection number 1. Central government is ordering you to maintain cost records. What comes under cost records, sir? Records may include material, records may include labor, it may also include what? Other costs, other overheads. Okay, all these things must be maintained by whom? Prescribed class of companies. As may be prescribed. Whenever you listen to the word called as may be prescribed, immediately you need to go to rule. So there is a rule called as rule number 3, where we need to identify which class of companies are prescribed. Okay, so let us go to as may be prescribed. I just need to click on as may be prescribed. You can also click as may be prescribed. If you can click, you will directly find rule number 3. Okay, I am clicking on as may be prescribed now. Okay, there is something which is displayed. Rule number 3 got displayed. Very easy. So as may be prescribed anunda, click on that as may be prescribed. You will find out what? A rule. So rule number 3. See, rule number 3. Application of cost record. For the purpose of section number 148 subsection number 1, the class of companies including foreign companies engaged in production of goods or providing services specified in the table which is given below. There is a table which is given below. See, the table is divided into part A, and if you can scroll down, you can also identify part B. Okay, there are certain companies which are given here, certain industries which are given here. Okay, so table A is called as the regulated sector. Table A is called as what? Regulated sector. You know what is regulated sector. So in this type of industries, we'll have one regulatory authority. Yesterday I told you, telecommunication services. Who is the authority? TRAI, Telecom Regulatory Authority of India. So there are certain regulatory authorities which are there for this type of companies which are prescribed in table number A. So how many industries are regulated industries, are covered under regulated industries? Only 6. Okay, you can watch in your phone itself. Only 6. First one, telecommunication services, telecommunication industry. Second one, generation, transmission, distribution, and supply of electricity. Generation, transmission, distribution, and supply of what? Electricity. So second one is electricity. Third one,
Petroleum product.
petroleum products. Petroleum products. Okay. Who is the authority? Petroleum and Natural Gas Regulatory Board. So this is the authority. Okay. Fourth one, drugs and pharmaceutical industry, fertilizers, and the last one is sugar and industrial alcohol. So these are the 6 industries which come under regulated sectors. Table A. So part A of the table. Part A of the table talks about regulatory sectors. How many regulatory sectors are there? 6. Okay, 6. So when it comes to the second part B, what is the side heading of part B? Non-regulated sectors. Non-regulated sectors. How many are there? 1, 2, 3, 4, 5, 6, 7. Oh, 33. 33 sectors are there in non-regulated areas. Okay, non-regulated. So entire industries got divided into regulated, non-regulated. Regulated lo 6, non-regulated lo how many are there? 33 are there. Okay, any kind of company which is prescribed here in this table, either A, either it may be B. Okay, any kind of industry which is specified in this table is required to maintain the books of accounts in relation to cost, maintaining the details of material, labor, and other costs. Okay, all these regulated and non-regulated sectors. When their turnover, see here, having an overall turnover, in the first paragraph it is there, having an overall turnover from all of its products and services of rupees 35 crores or more during the preceding financial year. So this is the rule number 3. So what they are trying to say, let me write in the form of notes. Okay, let us now develop some notes on this area. We are into the topic called as what? Section number 148, called as cost audit. Along with me, you can also write. Okay, so it is what? Cost audit. So section number 148 ni I am just dividing into two parts. 148 subsection number 1 and 148 subsection number 2. Later we'll discuss about subsection number 2. For the time being, we'll write the details of subsection number 1 itself. Okay, so subsection number 1 low, what it is said? Central government may order specified industries, right or not? Specified industries to maintain what? Yes, to maintain cost records. Containing the details of what?
Material, labor,
Yes, material, utilization of material and labor, and what? Other items of cost. Other items of cost. Okay, so specified industries, what does it mean?
both regulatory and non-regulatory.
Yes, specified industries may be specified industry may be two parts. It may be regulated sector, it may be non-regulated sector. So I am developing the notes on the spot. Okay. So open two branches, regulated sector, non-regulated sector. Okay. So regulated sector lo how many are there? Six industries are there. Six industries are there. Non-regulated sector lo how many are there? 33 sectors are there. Okay. Six, it is very easy to write. Six. Okay. What are those? Yes. Telecommunication. Telecommunication. Try. TRAI. Electricity. Electricity. Petroleum. If you can remember, you can say. Petroleum. Sugar. Sugar and industrial alcohol. Sugar, comma, industrial alcohol. Next one. Drugs and pharmaceutical. Drugs and pharma industry. Okay, very simple. Yes, sixth one, it is fertilizers. Sixth one, it is, yes, fertilizers industry. Okay, so all these six will come under regulated industry. So non-regulated industry, how many are there? 33 industries are there. We don't need to write. It's not required. Okay, so specified industry means it may be regulated sector, it may be non-regulated sector. And now for all these sectors, is the cost record maintenance provisions are applicable? This is my question. It is not applicable. It depends upon what? Turnover limits. It depends upon what? Turnover limits. If there immediately preceding financial year turnover of all the products and services in aggregate, if it crosses or equal to more than or equal to 35 crores, then only cost record maintenance is applicable. Okay, cost record maintenance is applicable. So it may be regulated sector or it may be non-regulated sector. For both the things, what is the applicable turnover limit? Aggregate turnover more than or equal to what? 35 crores. Year, preceding financial year. Yes, preceding financial year. Aggregate turnover preceding financial year more than or equal to 35 crores. And aggregate turnover includes what? Aggregate turnover includes both production of goods and providing services. So what is not included? Trading activity is not included. And hence ATO is nothing but combination of production of goods plus provision of services. So put together the overall aggregate turnover, if it exceeds or equal to 35 crores in the preceding financial year, then those sectors are required to maintain the cost records, which include the utilization of materials, labor, and other elements of cost. That's it. This is section number 148, subsection number 1, read with rule number 3. Easy? Very simple. So why am I opening all this MCA 21 now? Why I am writing in detail all the provisions? What is the requirement of writing all these things? Because it is very, very important, which carries 10 marks. This is second area, second module, which carries 10 marks. And hence, whatever we write now, it should be fixed in your mind. Okay, at any point of time when someone asks you, you need to say this answer. Okay, even in your dreams, if someone wakes you up, you need to answer this, because this is the mother section of CMAs. And hence I want you to know each and every part of this section very clearly and score some good marks in this section, module number 2. Okay, so let's go and read section number 148, subsection number 2. So all the details are written in the notes. Okay, let me go to 148, subsection number 2. Yes, I am now reading. See, there is one more part which is given here. Proviso, subsection number 1 ki there is one proviso. Okay, I am reading that provision now. Provided that central government, before issuing such order, the central government is ordering specified industries to maintain the cost records. But before that order is given, it must consult the regulatory authority which is constituted as far as that particular industry is related to. So central government, before the order is made, it needs to communicate with whom? That authority. Who is that authority? For telecom industry, it is TRAI. So to them, we need to consult. We and our, who is that? Central government. Central government, before it makes any order, it needs to communicate with whom? That regulatory authority, respective regulatory authorities. That's it. Okay. Let us go to subsection number 2. Okay. If the central government is of opinion that it is necessary to do so, it may by order, again the new order is given. It may by order direct that the audit of cost records. This time I am talking about audit. I am not talking about maintenance of books. I am talking about audit. So subsection number 2 talks about audit. Okay, central government may order that particular sector to get its cost records audited, which are covered under subsection number 1. Of those sectors which are covered under subsection number 1. So when you want to be covered in section number 148 subsection number 2, first of all you must be covered under 1. Because there is no point of audit when there is no accounts, right or wrong? And hence for those companies to which 148 subsection number 1 is applicable, then there may be a chance cost audit is also applicable for those companies. Okay, so 148 subsection number 2 is the subset of 148 subsection number 1. Many companies may be covered in 148 subsection number 1. Out of those, few companies will be kept aside, and for those companies, what is applicable? Audit may be applicable, depending upon the turnover limits again. Okay, is it clear or not? So let me continue reading. Which are covered under subsection number 1 and which have a net worth of such amount as may be prescribed again. Net worth as may be prescribed or turnover as may be prescribed. For the time being, only turnover is given. Okay, so turnover gurinchi we'll try to understand. So I clicked on as may be prescribed. Okay, rule number 4. Rule number 4 got displayed. See, rule number 4. Before I write rule number 4, let me continue this notes. So 148 talks about what?
Audit.
This is cost accounts. 148 subsection number 1 cost accounts. 148 subsection number 2 cost audit. Who may order? PG may order certain industries which are covered under what?
Subsection number 1.
Yes, which are covered under 148 subsection number 1. And for those companies, what can be ordered? CG may order certain industries which are covered under 148 to get cost accounts audited. What is CA? Cost accounts. Cost accounts. You write in detail. Cost accounts audited. Cost accounts audited. Okay. Audited. Certain industries annan kada. So what is certain industry? That we need to write. Understand. Okay. So certain industries. Which industries are covered under 148 subsection number 2? 148 subsection number 2. So we need to read rule number 4, not 3. Rule number 4. Rule number 4. Let me read rule number 4 now. Every company specified in item number A of rule number 3. What is item number A? Regulated sector. Okay, regulated sector shall get its cost records audited in accordance with these rules if the overall annual turnover of that company from all its products and services during the immediately preceding financial year is rupees 50 crores or more. All the products put together. The company is engaged in producing two goods. Okay. So the turnover of the two goods, you need to calculate the turnover of two goods to be calculated in an aggregate. When it crosses how much?
50 crores.
50 crores. Okay. 50 crores or more, and the aggregate turnover of the individual product, it is not or, it is and, both the condition must be satisfied. So second one, and the aggregate turnover of the individual product for which the cost records are required to be maintained under rule number 3 is rupees 25 crores or more. Is rupees 25 crores or more. Let me take it down. So rule number 4 is divided into two aspects. So one, it is regulated sector. The second one is non-regulated. So if it is regulated sector, then you need to check two conditions. What are the two conditions? Aggregate turnover for all of its products and all the services. Aggregate turnover, if it is more than or equal to how much? 50 crores. Very beautiful. Okay, 50 crores aggregate turnover more than or equal to 50 crores. Okay, and both the conditions must be satisfied. And individual turnover of each product. Individual turnover. What is ITO? Individual turnover of each product. Okay, individual turnover. See here, the aggregate turnover of the individual products or services for which cost records are required to be maintained is rupees 25 crores. 25 crores. CR. So these are the two things which we need to remember. So regulated sector, non-regulated sector. Regulated sector is again divided into two branches. So two conditions are required to be satisfied. Aggregate turnover more than or equal to 50 crores and individual turnover more than or equal to 25 crores. Okay. When it comes to non-regulated, so the rule is not yet over. Sub-rule undi. There is sub-rule. Rule number 4, sub-rule number 2. Every company specified in item B. What is item B? Non-regulated. 33 industries are there. Okay. Every item which is specified in item B shall get its cost records audited in accordance with the rules if the overall turnover of the company from all of its products in the preceding financial year is rupees 100 crore or more. This time how much? 100 crore. When it is non-regulated sector, aggregate turnover is how much? 100 crores and individual turnover is 35 crores. Individual turnover is 35 crores. Continue reading. The aggregate turnover of the individual product or products or services for which the cost records are required to be maintained under rule number 3 is 35 crores or more. 35 crores or more. Let me write like this. Again two branches. Non-regulated again two branches. Aggregate turnover how much? More than or equal to 100 crores. And individual turnover of each product how much? More than or equal to 35 CR. And all the turnovers are required to be calculated for the preceding financial year only, not the current year. Okay, aggregate turnover must be what? Preceding financial year. The last one is preceding financial year. So I have one question for you now. Okay, we know for regulated sector, what is the individual turnover that is required? Individual turnover of a product. 25 crores. For non-regulated, 35 crores. My question is, there are two products. Out of those, one product crossed 25 crores. The second product is less than 25. Say example, one product is 30, second product is 21. Second product is how much? 21. In an aggregate, it became 50. So 51 kada. In an aggregate, it became 50. But the second condition, there is only one product which crossed 25. The second product doesn't cross 25. The second product is only 21. So is the cost audit applicable or not? My question is, all the products individually needs to cross 25 crores లేకపోతే or else individually any one product if it crosses 25 crores is it sufficient? So individually each product it needs to cross 25. Answer is no. So one product if it crosses 25 crores it is sufficient. Okay, it is sufficient, one product, because when you read this, see, I'm trying to read this again. See, third line of the rule. See here, 50 crores or more and the aggregate turnover of the individual product or products. So singular is also there, plural is also there. So when individual product, one product if it crosses 25 CR or 35 CR in the non-regulated sector, then it is sufficient. So either it may be individual product or it may be individual products. Okay, let me write like this. Say I am trying to give you some example for the same. There are two products, product number X, product number Y. Product number X turnover is 30, product number Y turnover is only 21. So total it is 51. So aggregate turnover of the two products which crossed 50 CR. 50 CR, which crossed 50 CR. First condition is satisfied. Okay, and the second condition also to be verified. What is the second condition? Individual product or products. Product or products. Out of these two, one product crossed 25 and hence second condition is also satisfied. So when you read the rule, so it is given as individual aggregate individual product or products. It is given like that, and hence when one good crosses 25 CR, then it is sufficient. The rule is applicable, and hence rule number 4 will be applicable in this case. I hope you will get the point very, very clear. Okay, so that's it.
Aggregate turnover, figure that are individual 25 ఆడాలి.
Ah.
ఎంత ఉంది కదా సార్?
Ah,
ఎంత ఉంది
నా
కదా?
ఎండే కదా చెప్పాను.
30 30. ఓకే.
First condition is different, second condition is different. For first and second condition there is end. First condition is separately satisfied. Second condition we need to check either individually or combination. So not combination, in fact, there are two goods X and Y. So X, if you see only X, it is called individual product. If you see both X and Y, like X20, X30, Y30, అలా అయితే ఏమవుతుంది? రెండు క్రాస్, anything is fine. Either one good may cross 25 or both the goods may cross individually 25. It doesn't matter. Okay, the rule is applicable. First condition satisfied. 20, 25, 45 అవుతాయి. Yes, first condition is not satisfied, cost audit is not applicable. Okay, so cost audit applicability we are trying to understand just by reading section number 148 subsection number 2 read with rule number 4. Easy, very simple. Try to write. మామూలుగా ఉండకూడదు, క్లారిటీ, పిక్చర్ క్లియర్గా ఉండాలి. ఓకే, సో రూల్ నెంబర్ 4, regulated, non-regulated, again subdivision. You can write now. Can I go forward and read further provisions? Yes. See, there are another 3 points. Third, sub rule number 3 I'm reading. The requirement of the cost audit under these rules shall not apply to a company. Shall not apply to a company which is covered in rule number 3. There is a company which is covered in rule number 3, and rule number 4 turnover limits are also applicable for that company. However, cost audit is not applicable because it is specifically excluded. Okay, there is some company which is covered under rule 3, and it is also covered under rule 4 as far as turnover is concerned. However, cost audit is not applicable. Because of what reason? Because sub rule number 3 says there are some exclusions, there are some exceptions for cost audit. So what are the exceptions for cost audit? What are the exceptions for cost audit? And meaning indeed, what is the meaning? For whom cost audit is not applicable. Okay, for whom cost audit is not applicable. So can I write here? Cost audit not applicable, not applicable in the following cases. How many are there? 3. In different color, third one is there, recently added. Where are we? Yes. See, in the green color it is given. The third one. Okay. First one, it is whose revenue from exports in the foreign exchange exceeds 75% of the total revenue. There is a company which is exporting some goods and it is getting some revenue. And in the foreign exchange, it is getting the revenue more than 75%. So there is a company which is having some sales. Domestic sales, export sales. There is total revenue. Out of total revenue, what is that? 75% of the revenue is received by way of foreign exchange only. Is received by way of what? Foreign exchange only. Then there is no applicability of cost audit. Okay. So can I develop some notes here in the first point? First point. What is that? First point. What can I write? Revenue from one kana revenue by way of లేకపోతే revenue from exports in foreign exchange is more than 75% of what is that? Total revenue. If the company is satisfying this condition, then cost audit is not applicable. Very beautiful. Simple first point. What is that? There is a company having total turnover, total revenue. Out of total revenue, more than 75% of the revenue is received by way of foreign exchange only, through exports. Through export. So majority cases it is doing exports, and hence cost audit is not applicable. Sir, why it got removed, sir? What may be the reason?
To improve exports.
No. Because when the goods are exported, there are other strict laws. Okay, other strict laws. When the money is received by way of foreign exchange, there are other laws which are applicable, which are very stringent, and hence anyway there the audit will be over. There the authorities will be more careful while the goods are received, or while the money is received in the foreign exchange, and hence again separate cost audit is not required. Okay, FEMA is the act which is very stringent when we receive the export currencies or foreign exchange currencies. Okay, and hence this is removed here. Cost audit is not applicable in such cases. Simple. And the second point, let me read second point, second exception. Revenue See, which is operated from special economic zone. Which is operated from special economic zone. There is a special economic zone which is notified by government, and in that zone there is a company which is incorporated and operated from there itself. So there is a company which is located in special economic zone which is notified by the government. In that zone, when you do any business in the form of any organization, in the form of any company, then what is not applicable? Cost audit is not applicable. Remember, rule number 3 lo, there are certain industries. So industry, regulated industry, non-regulated industry. If such industries are located in SEZ, okay, cost records may be applicable, but cost audit is not applicable. Though their turnover crossed prescribed turnover limits. Okay, because it is operated from special economic zone. Okay, so let me write here. Companies which are operated from special economic zone, SEZ. Very easy. Yes. Come to point number 3. Point number 3. A company which is engaged in generation of electricity. Generally, generation of electricity comes under regulated sector. Okay, regulated sector, and it is covered under rule number 3. And its turnover, if it crosses the prescribed limits, cost audit also may be applicable. Cost records maintenance is applicable. Cost audit may also be applicable. However, there is a company having power plant with them, and they are generating some power, but this power is not for the purpose of selling. This power is for the purpose of captive consumption. For themselves, they are generating the power, and that power, what is generated through that power plant, is used by the company itself. This is called captive consumption. Then again, for them, cost audit is not applicable, because they are generating the electricity for what purpose? They are not trying to sell, they are trying to use for themselves, captive consumption, and this is also not applicable for cost audit. Let me read the third point, which is engaged in generation of electricity for captive consumption through captive generating plant. Captive generating plant means what? So it is for the purpose of self usage. Okay, that's it. Okay, so engaged in generation of electricity. Let me write the third exception. Engaged in what? Generation of what? Yes, engaged in generation of electricity for, yes, captive consumption. For them, rule number 4 is not applicable. Cost audit is not applicable. Very easy. Simple. So with this, I completed section number 148, subsection number 1 and subsection number 2, read with rule number 3 and rule number 4 along with exceptions. Okay, done. So let's go to 148 subsection number 3. Subsection number 3. See, the audit under subsection number 2 shall be conducted by a cost accountant. A cost accountant who shall be appointed by the board. Who shall be appointed by the board on such recommendation as may be determined by the members in such manner as may be prescribed. So what is there in subsection number 3? Cost audit should be appointed by whom? ఏమనుంది అక్కడ? అంతే కదా, కాస్ట్ ఆడిట్ ఈస్ అపాయింటెడ్ బై హూమ్? బోర్డ్ ఆఫ్ డైరెక్టర్స్. నార్మలీ CA, chartered accountant, is to be appointed by members of the company, not board of directors. Members of the company will appoint chartered accountant, but cost accountant is appointed by whom? Board of directors. So subsection number 3 you can write now. Continue writing. Keep the side heading 148 subsection number 3. Cost audit shall be done by, cost audit shall be done by whom? Cost accountant. Cost accountant. Cost audit can be done by cost accountant. cost accountant. Who shall be appointed by? Board of directors. Who shall be appointed by? Board of directors. Okay, board of directors. And the remuneration shall be determined by the members. Remuneration shall be determined by the members. So for this remuneration, we have section number 142 separately. So we'll study remuneration part there itself. Okay. Also, I guess it is better to write here itself because there is some rule. Remuneration of the cost auditor. Okay, rule number 14. So it is better to write here itself. Okay. Let me read the remuneration part of cost auditor. See here, as may be prescribed and another, click on that. As may be prescribed, click on that. In case of companies which are required to constitute audit committee. Okay, there is one section called as audit committee for a company. So every company for whom certain limits are applicable, turnover limits or net worth limits are applicable, and that company needs to have audit committee. Audit committee. Did you ever listen audit committee? Audit committee when are audit committee. So usually audit committee will recommend the board of directors. It is a part of board of directors. Let me explain. See, there is a company which is having 10 board of directors. How many board of directors are there? 10 board of directors. This board of directors will be subdivided into various groups, various committees. Okay. Out of those, one of the committees, audit committee. Audit committee may have 3 directors. 3 directors. See, out of total board of directors 10, 3 directors formed audit committee. And this audit committee will take care of the audit of the company. It may be cost audit, it may be financial audit, it may be internal audit. All the audits will be taken care by whom? Audit committee. Okay. Audit committee will suggest the board of directors. And board of directors will represent before members in the annual general meeting. Generally, this happens. Okay. So there are other kind of companies also. Nomination and remuneration committee. In that, 2 or 3 directors may be there. So similarly, there is a committee called as what? Audit committee. Audit committee who all will be there? Directors will be there. Few. Audit committee is a subset of board of directors. So there is a company. For all the companies, audit committee is not applicable. For all the companies, audit committee is not applicable. There are certain turnover limits. If company crosses the turnover limits, then only they are required to constitute audit committee. If that company constitutes audit, if the company is applicable for audit committee provisions, then remuneration shall be suggested by whom? See, in case of companies which are required to constitute audit committee, then the board shall appoint an individual or a firm of cost accountants in practice as cost auditor on the recommendations of audit committee, which shall also recommend the remuneration. Okay. So let me write here. I am writing some rule here. 148 subsection number 3. Andulo I am writing some rule 14. Okay. So remuneration divided into 2 aspects. Company having what? Audit committee. Okay. Company having audit committee. Then audit committee will recommend cost auditor and also recommend what? Remuneration to be paid. to be paid. Who will recommend to whom?
We would recommend to the members.
Audit committee will recommend to board of directors. So if the company is having the audit committee, then the audit committee shall recommend the cost auditor and also recommend remuneration that is to be paid. Remuneration that is to be paid. So నేను ఇక్కడ I am writing here the audit committee will recommend to whom? Yes, ఇక్కడ board of directors about the appointment of who should be appointed as cost auditor and also recommend the remuneration to be paid. Okay, so the remuneration recommended by audit committee shall be considered and approved by the board of directors and ratified subsequently by shareholders. So audit committee will suggest whom? BOD. BOD will approve and BOD will get the ratification from shareholders. Ratification means what? Subsequent acceptance. Ratification is nothing but subsequent acceptance. So it is already accepted by board of directors, which should also be accepted by shareholders. Okay. So next one, in case of other companies means what? Where there is no audit committee. In case of other companies which are not required to constitute audit committee, the board shall appoint an individual. Who shall recommend now? BOD itself will recommend the appointment of cost auditor and also recommend the remuneration to be paid, which should be ratified by members. That's it. See, audit committee will recommend to board of directors and board of directors the cost auditor to be appointed. See here I am just changing to be appointed and also recommend the remuneration to be paid. See, in the first branch I am writing. In the first branch only I am writing. Okay. Board of directors will approve the same and members of company will do what? Ratify the same. Easy. Board of directors will approve the same and the members of the company will ratify the same subsequently. Very easy. Simple. Next one. Company not having what?
Audit committee.
Company not having audit committee. Then BOD will select. BOD selects the cost auditor and also decides the remuneration. Which should be subsequently ratified by whom? By members of the company. That's it. Very simple. This is 143 subsection number 148 subsection number 3. 148 subsection number 3. Subsection number 3. Okay. Can I go forward to subsection number 4? Right. Please write.
Section that.
దాన్ని 30లో పెట్టమని సజెస్ట్
Okay. Easy. 148 subsection number 4. So let me go to 148 subsection number 4. The audit conducted under this section shall be in addition to the audit which is covered under 143. You know 143? Section number 143. Financial audit. Financial audit. Rights and duties of financial auditor. CA. Okay. So there is a company which is already having company audit by a CA. So is that company again required to get their cost accounts audited? Two audits, cost audit and normal company audit. Is it applicable for a single company? This is my question. There is a company for which statutory audit is applicable, which is done by CA. For that company, again cost audit is required or not? This is my question. Required. Yes. That audit is different. This audit is different. So cost audit is in addition to the normal audit which is done by CA. So for all the companies, whether it is private company or public company, audit done by CA is mandatory for all the companies. There is no specified regulated, unregulated sectors are not there for normal CA audit. Okay. For CMA audit, the cost audit, it is only applicable for few sectors. So the CMA audit, cost audit is applicable in addition to the CA audit, which is done by CA under section number 143. Okay. So this is point number 4. The audit conducted under this section, like cost audit, shall be in addition to the audit conducted under section 143. Danike I am just giving some notes. 148 subsection number 4. 148 subsection number 4. Cost audit is in addition to statutory audit of companies by chartered accountant. Statutory audit under section number 143. 143 of company by chartered accountant. That is different. This is different. For a same company, both audits may be there. Both audits may be there. And hence come to section number 148 subsection number 5. Subsection number 5. I am reading subsection number 5. The qualifications, disqualifications, rights, duties, obligations applicable to the auditors under this chapter. That is, whatever the disqualification, qualifications, rights, powers, whichever is applicable for a chartered accountant, the same are now applicable for. There is one section called as 141, which talks about disqualifications of an auditor, qualifications and disqualifications of an auditor, which is applicable for CA also. The same qualification, disqualification is now applicable for whom? Cost auditor also. So continue reading. So far as may be applicable, apply to whom? Cost auditor appointed under this section. So there is an auditor appointed under 148, and on him other provisions like qualification, disqualification, rights, powers, duties, everything is applicable for cost auditor also. Whatever it is applicable for CA, mutatis mutandis will be applicable for. Yes. Okay. As far as కాదు, mutatis mutandis అంటే as it is applicable. Okay, next one.
మాకు
As it is. Next one. (145). It shall be the duty of the company to give all assistance and facilities to the cost auditor appointed under this section. So it is the duty of the company management to support cost auditor. All the assistance support must be given. Whatever it is required to the cost auditor, he can get the support from whom? Management. Management. Okay, that's it. That is subsection number 5. Please write. The qualifications, disqualifications, disqualifications, rights, duties, obligations, applicable for statutory auditor, is applicable to the cost auditor also, and the company shall provide the assistance to the cost auditor to conduct the audit, of cost records. Okay, so after the audit is done, cost auditor needs to give the cost audit report. The audit report should be submitted to board of directors. So the audit report should be submitted to whom? Board of directors. Later board of directors will submit to central government. So internally also central government will be there. So it is the responsibility of the cost auditor to write the cost audit report, and this report should be submitted to whom? BOD. So write that. Same section only. Same subsection number 5. Cost audit report shall be submitted by cost accountant to whom? To board of directors. Easy. Keep the side heading. 148 subsection number 6. Okay, 148 subsection number 6. ఇప్పుడు 148 subsection number 5 లో just now I have mentioned what? Cost accountant needs to submit what? Cost audit report to whom? To board of directors. Now 148 subsection number 6. The company needs to submit this report to whom? Central government. Okay, so the company అంటే who is the brain of the company? Board of directors. So company is acting and board of directors are acting in me. Okay, so read 148 subsection number 6. The company shall within 30 days from the date of receipt of that copy of audit report, 30 days లో, okay, it should be submitted to whom? It should furnish to central government with such report along with full information and explanation for every reservation and qualification contained there. See, very simple point. Here the cost accountant has given cost audit report. The cost audit report may contain certain qualifications. What is qualification? Qualification or reservation. So there are two types of reports: modified opinion, unmodified opinion. If you want to give modified opinion, there may be some reasons. Okay, and those reasons must be specified in this cost audit report, and the board of directors need to explain that reservation, and that explanation shall be annexed to cost audit report, and that cost audit report should be given to whom? Central government. So to central government we need to submit cost audit report with such full information and explanation which should be provided for the each and every reservation or qualification which is given by the cost audit. Okay, so see here, this cost audit report may contain what? This cost audit report may contain qualifications, reservations, and for that reservation explanation must be given by whom? Board of directors, and such explanation should be submitted to whom? Central government. So that is the point I am going to write here in 148 subsection number 6. So the company needs to furnish what? Furnish what?
Both costs.
Yes, furnish cost audit report with full
Information and explanation.
explanation and information. Full explanation and information. With full explanation and information for what? All the qualifications and reservations given by
BOD to
reservations ఎవరు ఇచ్చారు? Given by cost auditor. So qualification and reservation given by the cost auditor, and such explanation should be submitted to whom? Central government. Within how many days? 30 days of receipt of the cost audit report. The company received cost audit report, and from the date 30 days, within 30 days what should be done? We should submit to central government this cost audit report along with the full explanation. That's it. Okay, so within how many days? Always remember, whenever there are some days which are given within 30 days, so 30 days started from, that must be remembered. It is not from your date of birth. Okay, so 30 days from
the cost audit.
the receipt of cost audit report. Okay, the receipt of cost audit report. Okay, within 30 days of receipt of cost audit report. That's it. This is 148 subsection number 6. Come to 148 subsection number 7. See, 148 subsection number 7, very simple. Now a cost audit report is there with whom? Central government got all the information. If the central government needs any further explanation, and it may order the company, it may direct the company to provide additional explanations whenever it is required. This is subsection number 7. Let me read 7. If after considering the cost audit report referred to under this section and the information and explanation furnished by the company, okay, the explanation is given by the company already. However, the central government is of opinion that further information and explanation is necessary. Who needs further information? Central government is of opinion that any further information, if it is required, then it may call for such further information and explanation from the company. So the central government may call for the further information from whom? The company, and the company shall furnish it within such time as may be specified by that government. Very easy. See here. How to write? 148 subsection number 7. If CG is of opinion, CG is of opinion that any further information or further explanation is required, comma, then CG may call for it. CG may call for it, and the company shall furnish such additional information. Furnish and Ryan shall, the company shall furnish the same within the time allowed. By whom? Central government. Beautiful. This is 148 subsection number 7. That's it. Okay. So let us go to 148 subsection number 8, which is penalty, which we are not going to complete now. 148 subsection number 8. Okay. So because 148 subsection number 8 lo, what is written ante the penalty, whatever it is there in 147, section number 147 lo, there are some penalty provisions. The same will be applicable here. And hence we need to read section number 147. So I will go to 147. Once I complete 141, 142, 143, all these things I need to complete, and thereafter I will come to 147. So for the time being, I am ignoring section number 148, subsection number 8, which talks about 147. Okay, so please read, take 2 minutes time and refer all the provisions. It is simple only. Please read. Okay. So we completed the important section of cost audit. So let us now go to next area where we talk about qualification, disqualifications, and appointment of cost auditor, time period within which he needs to complete the audit, rights and duties, powers, casual vacancy that may be erased, how to fill up the casual vacancy. All these things we are going to discuss now. Okay, keep the side heading. Provisions related to provisions related to provisions related to what? Appointment. Provisions related to appointment, period, appointment, comma, period to complete audit, period to complete audit, comma, casual vacancy, etc. etc. Okay. First side heading button it is appointment. As you all know, who appoints the cost auditor of a company?
Board of Directors.
Yes. Appointment is to be done by board of directors. Board of directors appoint whom? Cost auditor. Cost auditor. Okay. Point number 2. Appointment must be done within 180 days of commencement of the financial year. Commencement of financial year. See, financial year starts from April to March, April 1st to March 31st. So after the financial year is commenced, within 180 days, a cost auditor must be appointed for a company. Once 148 subsection number 2 is applicable. Okay, within how many days he should be appointed? 180 days. Okay. So within 180 days of commencement of the financial year. And point number 3. After the cost auditor is appointed, after the cost auditor is appointed, company shall intimate to CZ. Company shall intimate CG within 30 days. Within 30 days. Regarding what? Regarding appointment of cost auditor. Regarding appointment of cost auditor. Regarding appointment of cost auditor. Okay. And this is appointment. This is regarding appointment. Come to the case of completion. Keep the side heading completion. Keep the side heading completion. Completion. So the cost audit must be completed within 180 days of closure of the financial year. Say after March 31st, within 180 days, the audit must be completed. So appointment is also 180 days. Completion is also 180 days, but appointment is from the beginning of the financial year and completion is after the closure of the financial year. So this is the closing period within which we need to complete the cost audit. So right, audit must be completed within, cost audit must be completed within cost audit must be completed within how many days? 180 days. So before 180 days also they can complete it. The maximum time period is 180. Even before 180 days they can complete it. Okay. So within 180 days from what? Yes, closure of financial year. Simple. Closure of financial year. And 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 cost auditor shall forward and cost auditor shall forward cost audit report shall forward cost audit report to board of directors to board of directors along with along with along with what qualifications and reservations why cost auditor will give explanation? The explanation must be given by whom? Board of directors. So they will just write qualifications and reservations. That should be explained by whom? Yes. So this is completion. Okay. Very easy. Next one, casual vacancy. Casual vacancy. Keep the heading casual vacancy. After a valid appointment after a valid appointment of cost auditor after a valid appointment of cost auditor after valid appointment of cost auditor, if he resigned, removed, or resigned, comma, removed, or in the event of death, in the event of death, in the event of death, the casual vacancy in the office of cost auditor arises. The office of cost auditor arises. Cost auditor arises. So they appointed one auditor and he got removed or resigned or faced death. Okay, in the event of these three things, casual vacancy arises, and in the place of removed auditor, the new auditor should be appointed. Who should appoint the new auditor? Again, board of directors. Okay, so continue. 30 days. ఎంతవరకు రాశారు? అరైజెస్ అని రాశారు. Casual vacancy arises, and such casual vacancy and such casual vacancy and such casual vacancy shall be filled up by board of directors within 30 days. Within 30 days. within 30 days. And must also intimate CG, and must also intimate CG within 30 days. Within 30 days. Within 30 days. Regarding the appointment of casual vacancy auditor. Regarding the appointment of casual vacancy auditor. Regarding the appointment of casual vacancy auditor. Easy? Simple. Removal on that. Removal. Keep the side heading removal. Cost auditor may be removed by board of directors. Cost auditor may be removed by board of directors by passing board resolution. By passing board resolution. Full stop. Okay. However, the removal can be possible. However, the removal can be possible. The removal can be possible only after giving opportunity of being heard. Opportunity of being heard. See, cost auditor is appointed by whom? Board of directors. He can only be removed by board of directors. And board of directors, while they take the decision, they need to pass board resolution. Board of directors meeting will be there. In that, resolution must be passed. And before we remove something, or before we remove someone, a reasonable opportunity of being heard must be given. We need to listen their point of view, and after giving reasonable opportunity of being heard, then only he can be removed. This is the removal provisions. Okay, so I just want to wind up the session now. It is almost 10 o'clock now. You have your next class. I just want to wind up the session. Tomorrow we'll continue at same time. Okay, thank you. Bye bye.